DeFi, short for Decentralized Finance, emerged a couple years ago as a term in financial technology. It's crypto for, we're cutting out the middleman. Well, actually, it's a bit more idealistic than that. It's part of an open source and blockchain technology ethos. Decentralized finance expands access to a much broader range of possible participants. And when you take out the intermediaries and flatten the hierarchies, you often wipe out all these extra layers of costs, timing, and friction. DeFi drives innovation. Traditional financial institutions act as gatekeepers or often hurdles to would-be participants. Say maybe a small business that needs capital for growth but doesn't check all the right boxes. There could be other financing options that are a perfectly good fit, but the more creative solutions just aren't going to make it through the bottlenecks of these centralized players. Decentralization is a defining characteristic of blockchain technology. People who live in countries all over the world can transact with digital currencies. DeFi builds that idea out into applications such as smart contracts, stablecoins, and lending platforms. For instance, Stronghold Capital participated in a syndicated loan to a Web3 research firm through a blockchain-based investment platform. Several years back, disruption was a buzzword in fintech. This is a similar concept and part of an ongoing cycle of disintermediation. Money and power can conglomerate, but the financial incumbents are often too big to innovate. So they face recurring challenges from savvy, nimble startups and outsiders. Through our investment arm, through our payments ecosystem, and our SHX token, Stronghold has been expanding the reach of decentralized finance.
Welcome to DRJ Crypto News Update. Welcome to episode 50. Subscribe now. Decentralized finance, DeFi, tokens are a category of cryptocurrencies that facilitate financial services like lending, borrowing, and trading without traditional intermediaries like banks.
What is Uniswap? Uniswap is a public, open-source, decentralized exchange that allows you to exchange ERC20 tokens on multiple blockchains like Ethereum, Polygon, Arbitrum, and more. Instead of trading with another person in an order book, you're trading with a liquidity pool funded by other users. They deposit pairs of tokens into the pool, receiving liquidity tokens in return, which can be redeemed for a share of the trading fees. But what sets Uniswap apart? Two things: the automated market maker system, allowing you to trade without an order book, and the ability to list tokens by anyone. The Uni token is the Uniswap protocol's governance token. Users and organizations that hold Uni can use it to vote on decisions related to the Uniswap DEX. Swappers pay three types of fees: network fees, liquidity pool fees, and platform fees.
A decentralized exchange protocol that allows users to swap cryptocurrencies. Uniswap uses an automated market maker (AMM) model where liquidity is provided by users who deposit cryptocurrency pairs into liquidity pools. When users swap tokens on Uniswap, they trade against the liquidity in these pools rather than an order book. Liquidity providers earn a percentage of the trading fees generated when users swap tokens. Uniswap is built on the Ethereum blockchain and is one of the most widely used decentralized exchanges, DEXs, in the DeFi ecosystem. The UNI token is Uniswap's governance token, which allows holders to vote on protocol upgrades and changes.
DeFi overall is a pretty underperforming sector right now. It has been for like 2 years now, ever since DeFi summer. It is a really big sector that will have a comeback. Aave is one of the leaders in this space, somewhere between B and C. I will put it in B for now. Nobody's talking about it, which means it's decent.
a lending and borrowing platform where users can earn interest on their crypto deposits or take out loans. Aave allows users to lend their cryptocurrency holdings and earn interest on them. The interest rates are variable and determined by supply and demand. On the borrowing side, users can take out loans in various cryptocurrencies by depositing collateral. The amount they can borrow is based on the loan-to-value (LTV) ratio. Aave uses a liquidity pool model, where the lent crypto assets are pooled together and borrowed from. The protocol utilizes a dynamic interest rate model that adjusts based on utilization rates in the pools. Aave also offers additional features like flash loans, which allow users to borrow without collateral as long as the loan is paid back in the same transaction. The Aave governance token gives holders the ability to vote on protocol upgrades and parameter changes. Aave is built on Ethereum but has expanded to other blockchains like Polygon, Avalanche, and Phantom to increase accessibility and liquidity. This decentralized approach aims to increase accessibility, transparency, and efficiency compared to traditional finance. However, it also introduces new risks that users need to be aware of, such as smart contract vulnerabilities, liquidity issues, and regulatory. Tell me what you think of today's update. Thank you very much. See you on the next video.